Hey traders, this is Blake Morrow with Trader Summit, and I have with me once again Mr. Bruce Fraser. You are Mr. Wyckoff, and I love seeing your work, Bruce. How have you been?
I've been great. It's great to see you.
It's
We
great to
always have
see.
so much fun when we get together.
I know it has been. It's great to see you, and I love the way that you look at the markets, and it's interesting because today, I would say this week, we're at a very big inflection point in the market, and we have the Fed coming up next week, and I think that's going to be the primary driver. But it's going to be interesting to see what your work has shown and and is showing us currently in this environment. So, how do you feel about where stocks are at right now?
Well, maybe let's just take a minute and start with a really big picture.
Okay,
And I have to share my screen
yeah,
here.
let's
Hold
do
on.
that. Let's see it.
And so let's just start here and then we'll come back to that other chart.
Okay,
So this is the NASDAQ 100. NASDAQ 100 is really the primary drivers in the NASDAQ 100 are these mega cap stocks. And we all know which ones those are. These are the FANG stocks. And this trend channel goes all the way back to 2010. And you can see this just incredible trending environment that had a throwover up here in 2020, 2021, where it just climbed over the top and lived there for a year. But then at the end of 21, it just started to cascade lower, came back into the channel, and look where it is now, Blake. It's right back down on this all important demand trend line where it's touched actually. Look at these are the two anchor points, 2010, 2011. But then after that, all these touches, well, we came right back down to this level, which I think is existentially very, very important for not only the NASDAQ, but also for the market in general. And so I'm of the mind that we could actually have a more important rally back in, say, into the middle of this channel here near term, which, we'll have to see what happens after that. But we need to catch a bid here and have these mega cap stocks start to rally a little bit. And we can see that the Dow Jones has been really the stellar performer here since the lows back in October. Let's see if I can find the Dow here.
No,
So here,
what happens if we don't? Like, let's say the Nasdaq breaks that channel lower going into year end. What's that going to do to the remainder of the market?
well, see, this is what's so much fun about talking to Blake. So here, one of the really big things that I'm somewhat concerned about is the yield curve. And so here you can see that this is the yield curve going back to the end of October. And this is the 10-year, 2-year, and the yellow shaded area, Blake, represents a negative yield curve. And so this is by definition tight money. This is when you get into a negative yield curve, it tends to be very bad for the economy, and it shows a tight money environment. This is up to date, and this is the yield curve 10-year, 3-month, which is the more traditional curve. And something like 80% of yield curves are now negative. So that suggests that we're going to have some kind of a real slowdown in the economy next year. And you can see that the yield curve, if you look on the right side of this chart, represents a very steeply inverting curve. I suspect that this means that we're going to have a real recession in 2023. And if we do get a real recession, I believe that these NASDAQ stocks, all stocks, could get below these trend channels and have another leg down. And so that's my big concern. But I'm a Wyckoffian, I'm a trader, I'm looking at this, I'm seeing point figure counts for higher prices. We've been trading these off of the September, October lows. And but we're just swing trading and we're being very defensive in our approach. But I do think there is a potential for higher prices near term, maybe into the end of the year, which is soon, maybe early 2023. But we have a very tight money environment, and the Fed is going to, as you said, have to show us some moderation here at their next meeting.
Hey, Bruce, this is a really interesting chart, but can you explain on the right-hand side the TLTs and the point and figure charts and what we're looking at there?
Yes, TLT is the 20-plus year U.S. Treasury bond ETF. And this chart I've been working with really since that distributional top was put in. Note the high price there is 152. And it formed a classic Wyckoff distributional structure. So it was begging to be counted. So I counted that structure. It gave us a whopping count down to 101 to 91 from 152. Imagine that kind of volatility being in the bond market. And so then on the way down, you can see it is just for sale. So, I mean, just the incredible drops in the bonds. And then there's a redistribution, which is the yellow shaded area there. And that area, we look for confirmation counts. And so this is a redistribution with a confirming confirmation count that goes to 93. So note, Blake, that this 101.91 range is confirmed by the redistribution to 93, and look where it goes. It went straight to 92. Stop there. This chart is not an updated chart, mainly because of all my annotations, but I did put in the current price. Current price is 106, so it's had a dramatic bounce back to 106 from 92. And that to me confirms these point figure counts are useful and valid. I believe that what we get now is a range bound market, and that this market trades in a range for a period of time, builds a cause, maybe a bullish cause.
Okay, well, you were, as you build that argument, and I'm trying to wrap my head around, the Nasdaq, bottoming out and showing some signs of life. Do you think this could be a result of what happens maybe next week? I mean, everybody's hoping, crossing their fingers that they get the Fed that maybe is less hawkish. Maybe they deliver a message that is less hawkish, and the market feeds into this this narrative that you're building.
I absolutely believe that could be the case, and that they will start to moderate their language, reducing the rate at which they're raising the Fed funds target rate. And I think that very well could happen next week. See, they're starting to break things. The Fed will raise rates until they start to break things. And not that FTX wasn't a real tragedy in its own right, but that FTX event was exposed by the very sharp rise in interest rates, which is an illiquidity event. The yield curve on the left there, Blake, is a measure of illiquidity in the system. That's when stuff breaks. And so there's a lot of zombie companies, a lot of zombie debt out there, and that's the stuff that really gets stressed when you have a tight money environment.
So, Bruce, you and I have traded around these markets for quite some time, and when you're in this type of environment, money tends to find companies that are actually making money versus a lot of speculative investments out there. What are some of the other indexes that you're looking at that might reflect that type of behavior?
Well, this I think is endemic of what's going on in the market. And I keep track of the number of stocks that are above the 39-week moving average, which is also the 200-day, which really is kind of a simple measure of an uptrend or a downtrend. And at the lows in September, October, only 61, if I remember my numbers correctly, of 500 S&P 500 stocks, 12.2%, were above their 39-week moving average. Today, that has risen up to as high as 330 of 500. So a tremendous participation in this rally from the what I would call the blue chip names or the industrial mainstream companies, not from the NASDAQ mega cap stocks, which have been lagging. They've been a source of funds that has rotated into these other areas. Russell 2000 is a classic index that's composed of mid cap, small cap companies that are more mainstream industrial and service businesses. And I believe that what the Russell is telling us is that there's money flow into other areas of the market and away from the NASDAQ mega caps. The institutions have so much of those stocks that it takes them a long time to reduce their holdings. They can't get rid of them, but they can reduce them. But look at what's happening with the Russell. The Russell has actually had a rally out of its downtrend channel, and in August pulled back, went back to the June lows, did not go below them like other indexes did, and then had a rally up and out in September, October. Look at the relative strength here. This is the relative strength of the S&P. This is the relative strength of the NDX. And you can see that in both cases, the Russell has been better than since May for the S&P and February for the NASDAQ stocks. And so I believe that that's what the rotation is about these days. And another example of that is to look over here. This is the energy select sector. This is the sector of all energy stocks. Energy stocks were unloved, unwashed, unbelieved back in 2020 at the COVID low. The most underinvested period for energy stocks in history, and which meant that they had extremely good values. So here is a point and figure count I did in January of 21 as this count line was being completed at $38. This count gave us an objective 79 to 95. We look at the chart on the right, which is up to date to our broadcast. Look at the 79 to 95 area. We actually hit that at mid-year, went into a range-bound condition. I think this potentially is reaccumulation for another move up, which I don't believe is done yet. And being at the top of the trading range is a point of elevated risk for energy stocks, excuse me, but they could pull back down towards prior support. But I would be looking at that as potentially the completion of a new accumulation. So I think energy stocks still have legs to go higher in the future, maybe in 2023 and beyond.
Well, that makes a lot of sense to me. I think this this current environment is very similar to past environments that you and I have witnessed, where the easy money is made. There's a lot less liquidity in the market, and the market seeks out companies like energy companies that actually make money versus speculative type of investing. So that to me makes a lot of sense.
Yeah, these stocks not only make a lot of money, but they have really attractive dividends.
Yeah.
And so you have a combination of companies that are growing their earnings. The underlying assets are going up. They're growing their dividends because they're growing their earnings, and the stock prices are in an uptrend. So this is an area where institutions were massively underowned, this asset class, and they're trying to gingerly raise their allocations.
Makes a lot of sense to me, Bruce. Well, you've been around for a long time. I love speaking with you because your experience really shines, especially with when you start looking at historical data and the way that you look at the charts. So, as a trader, how do I find out more about Mr. Bruce Fraser?
Well, I have a show. The power charting, which is on StockChartsTV every Friday, new episodes. I'm doing my last one of the year this coming Friday, and it's basically Wyckoff oriented. And I have a really terrific following. I also write a blog, and those shows are all available on demand, by the way. And my whole catalog is on YouTube. And then also I write a blog which is not behind a paywall or anything. That blog is available under articles at StockCharts.com, Wyckoff Power Charting, and that whole catalog is available too. I just posted one up on Friday. And so that's one thing to do. And then also this workshop coming up, Blake, is really for Wycoffians, and it's going to be a 3.5-hour event. And we have 5 just phenomenal Wycoffian educators that are going to come on and talk about different aspects of scanning, crypto, trade analysis, and even tape reading, live tape reading. And it's just going to be a great episode, a great show, great event. It's free, and it's sponsored by the International Federation of Technical Analysts. So go sign up and attend. It's going to be a blast. We're going to have a good time. No obligation. Just come and join us.
So I wonder if those crypto charts are going to show distribution patterns or not. Looks like we're going to have to find out there a little bit later.
Tune in. Tune in.
Bruce, I want to thank you for spending your time with us here at the Trader Summit community. If you guys and gals like what Bruce has shown you today, make sure you subscribe to our channel. Give him a big thumbs up. Comment down below if you've been looking at any of those charts that he was looking at as well, and maybe you've seen some accumulation, distribution, Wycoffian type of patterns develop in the market. I'm sure Bruce would love to hear from you. Bruce, thank you so much for joining us today. Happy holidays to you and your family, and we hope to see you at the beginning of 2023.
Thank you, Blake, and same to you. Same to everybody. Have a great end of the year, and always a blast to get together with you.
All right. Have a great day.
Thank you, Blake.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.